Good morning and welcome to the ASX at Breakfast. I'm Rachel, live from Kalkine Studios in Sydney. Now, the Australian share market is expected to open lower today. The SPI futures are pointing to a 0.2% fall. On Friday, the Australian share market closed 0.19% higher at 7,325. Looking at business news from this morning now, and Estia Health has entered into a scheme implementation agreement with Bain Capital, under which Bain Capital has agreed to acquire 100% of the shares in Estia Health by way of a scheme of arrangement. Should the scheme proceed, Estia Health shareholders will receive cash of $3.20 per Estia Health share, and that's reduced by the amount of any permitted dividends paid. The scheme consideration represents a 50% premium to Estia Health's closing share price of $2.14 on the 21st of March, prior to Bain Capital's proposal. Estia Health is permitted to pay fully franked dividends of 12 cents per share, which would enable eligible shareholders to receive up to 5 cents per share in additional benefit from franking credits. Waterco has signed a share sale agreement to acquire 100% of the shares in Davey Water Products from GUD Holdings. GUD is involved in the manufacture and importation, distribution and sale of automotive products, pumps, pool and spa systems and water pressure systems. The combination of Davey and Waterco builds a diversified group with a focus on complementary product strengths. Waterco is a leader in pool systems, infiltration and water treatment systems. Davey is the leading manufacturer of residential commercial pumps in Australia. Growth opportunities include leveraging geographical strengths across growing markets in Europe, USA, Middle East, Africa and Asia. The merged businesses will have a share of global water treatment markets across pool, water transfer and water treatment categories. The purchase price to GUD upon completion of the acquisition will be around $64.9 million. And the acquisition of Davey is expected to add around $120 million per year to the company's sales revenue. Dexus Convenience Retail REIT reports a statutory net loss after tax of $8.4 million, impacted by $41.3 million of asset devaluations, reflecting a 5% decline on prior book values. They did achieve solid property income growth, with an average rent revenue review of 3.7% for the period and like-for-like net operating income growth of 2.7%. Their expanded divestment program delivering $52.3 million of proceeds, reflecting 7% of the portfolio at an average 2.5% discount to prior book values, while enhancing overall portfolio quality and operating performance metrics. Dexus's property portfolio includes 105 assets valued at $781 million. Well, it's time for a short break, but stay tuned for more news set to affect your trading day.
Build better relationships, get connected, heard and noticed. We always believe in getting you the best. Kalkine Media's growing platform, Kalkine TV, helps you connect to an inquisitive audience from across the globe. Interact in a trusted environment. Showcase your brand on Kalkine TV in a seamless and effective manner. We connect and curate content as per your business needs. So why wait? Write to us at guestteam@kalkine.com.au.
Welcome back to the ASX at Breakfast. I'm Rachel. The SPI 500 shared 0.53%, or the Nasdaq Composite dipped 0.36%. The Dow Jones Industrial Average lost 0.43%. European markets closed higher. London's FTSE gained 0.47%. Frankfurt added 0.37% and Paris closed 0.75% higher. Looking at Asian markets now, Tokyo's Nikkei added 0.10%, Hong Kong's Hang Seng gained 0.61%, while China's Shanghai Composite closed 0.23% higher. Well, that's the latest from the ASX at Breakfast this morning. I'm Rachel, signing off for now.